Howdy, friends. Corey Moser with your weekly recap for Friday, August 15th. Now, this week brought a little bit of confusion as the market was buzzing a little bit with some big political news and some confusing economic data. First, the big political news: President Trump confirmed his plan to take Freddie Mac and Fannie Mae public later this year. That's a huge deal because both companies have been the major backbone for the U.S. mortgage market. So we'll be watching closely to see how that unfolds and what it means for your ability to get a home loan. Now, as far as conflicting economic data, there was some good news and bad news. The good news is that the inflation number was in line with expectations, but the bad news is that prices for producers just jumped unexpectedly, which could mean higher prices down the road. Now, some other things to keep in mind: the 30-year fixed rate currently, the national average is 6.56%. So rates actually moved quite a bit lower at the beginning of the week, and then the last couple of days they've moved slightly higher. But overall, the week, it looks like we were down a little bit from where we were last week. So that's some good news. And then there is speculation now. The expectations are that the Federal Reserve will lower interest rates on September 17th. This is because some of the information about employment has been soft. Inflation has slowed a little bit. So the expectations now, it's up to about 90% is what economists predict. The likelihood that mortgage rates will drop, not mortgage rates, but the Federal Reserve will cut rates. Now, keep in mind, what the Federal Reserve does with rates doesn't directly impact mortgage rates, but the markets will usually price in those adjustments, what they anticipate will happen, into the market already prior to those rate cuts. So that's primarily why you've been seeing rates drop over the last few weeks. And our expectation is rates will continue to drop slightly into the rest of the year and into the beginning of next year. I hope that information helps you. Also, keep in mind, right now we have some incentives currently available that will give you a lower 30-year fixed rate on what we call a rate and term refinance. So that's just refinancing the balance that you owe, not taking any cash out. But if you bought your home in the last 2 or 3 years and your interest rate is over 7%, we most likely can get you a rate now under 6%. So if you're in Utah or Colorado, which is where I'm licensed, please reach out and we will talk to you again next week, or hopefully sooner if you're looking to do a refinance. We'll talk to you soon. Thank you.